here's another reason why you want to take control of what you're doing.
Everything kind of funnels into the only winning move is not to play the game.
I don't know, guys. This whole thing sounds pre-recorded.
My gosh, welcome back to episode 57 of the Weather Report. Welcome to the show. My name is Bruce McGee. I'm the host of the show. I am joined again by my merry mix of gentlemen that we have here. That would be Ken Madden from Mad K Studios, Jason from Horrible Designs, and Michael from we're going to say, what was it, Dynasty
Wealth Partners? Yeah,
Dynasty Wealth Partners.
Yeah.
Exactly.
We're all wearing the same clothes, and we all stink. That's kind of
we're wearing the same clothes
because I still love America, but I hate taxes. So this is like I got 100 of these shirts. I'm wearing a different hat.
There we go. If you tuned in to us last week, we had a really interesting conversation with how Michael came up through the ranks of being a tuba player to the point where he now is a distributor for AMSOIL and also has Dynasty Wealth Partners, which is an infinite banking type of business. And we're going to keep going with the discussion on that. But I just want to welcome everybody back. It looks like Ken was chomping at the bit to even get this started and ask a question. So I'm going to let Ken, go ahead and do it.
What the hell is infinite banking? So if anyone that listened to our last episode, and if you haven't, I recommend you go back, listen to episode, was it 53? For our Patreon folks, you're hearing it right afterwards. But what we want to do is kind of figure out dumb it down to the 15-year-old kid listening to their dad explain something boring. What is infinite banking? How does that work to borrow money against your life insurance policy?
Yeah. Well, I guess the simplest thing would be to equate it to another type of product that many people probably know about, which is a home equity line of credit, right? So you purchase a home, and as you make mortgage payments, the amount of equity in the home grows, as well as the value of that home over time is going to increase, mainly because of inflation, but it's actually a depreciating asset because you got to put repairs into it. But it growing in value because of inflation. Thank you, the government and the Federal Reserve and all that. But anyhow, so it works like that, right? So you buy this specially designed life insurance policy, and you make premium payments. So instead of mortgage payments, you make premium payments, and as you're making these premium payments, or you're accumulating what they call cash value, or cash surrender value is what it's really called. And over time, that cash value grows. And because the companies that we use, they're mutual, which means we get to take part in the profits of the insurance company. And then, same within a home equity line of credit, you'll have an amount that you can borrow up to. It's usually like 70% or something like that of the value of the home, or somewhere in there, 60 to 70%. You can borrow that and use it for whatever you want to use it for. You want to go buy a car with it. You want to buy a boat. You want to make home improvements. You want to put on a deck or something like that. You use your HELOC, and then the company you get your home equity line of credit from, you pay them back. They're going to charge you interest for it, but you pay them back. All the while, the value of your house is still going up in value, right? So, or the equity is accumulating, and you're still making your mortgage payment. So it works exactly like a HELOC, except the only difference is it uses life insurance as the collateral versus the value of the home as the collateral. And the reason it works is because it must, unlike homes, like in 2008, the value of homes went down, right? Because we had the housing crash. The reason it goes up every single year is because the cash value and the death benefit must equal at age 121. So it must accumulate every year into that. And the reason that, it's life insurance, right? But it has a lot of tax advantages. It grows tax deferred, and it can be used tax free if you use the loan provision. So that's not a taxable event,
Right.
and it passes tax free to the next generation, and it's private. It doesn't, the value of it's not reported to anybody. It's between you and the life insurance company.
Mhm.
So you get a lot of privacy with that. You got a lot of protection as far as from creditors. Like if you were to get sued, or bankruptcies or something like that, they can't touch in most states. Now this isn't in every state, but in most states, it's protected from creditors.
Yeah. You said that you also, with the partners that are mutual partners in the insurance industry, that you also, the people that do infinite banking with those companies also benefit from the profits from those insurance companies. Is that different than a HELOC?
Well, I mean, it's just the dividend. So the profit is paid back to the policy owner in the form of a dividend, right? So that is the increase in value of that policy every single year, because it's growing,
Okay,
just
so
like
it's
your
not the
house.
profit so it's not the profit of the individual insurance company. It's the profit or the dividend that you've accumulated in your policy. Is that
No.
correct?
It's the profit of the insurance company. So the
Oh,
insurance
gotcha.
company sells products. They might sell annuities. They might sell term life insurance. They might have other financial products. They might have like long-term care or whatever. And if they're managing their portfolios correctly, they're investing in life insurance companies. They're very conservative. They don't invest in the stock market, but they invest in real estate. They might do joint ventures. They actually might loan money to other financial institutions, and stuff like that. So as they're making their money work for them, and they're underwriting. So the reason they don't just give anybody life insurance is because if they're a bad they're a bad risk, right? The company's going to lose on that. So they want you to live a long time. They want you to be healthy, and and what you're paying for it. And they've got that figured out. They use what they call actuaries. Those are the engineers of the financial world. So they make sure what you pay for your life insurance is a good amount that's going to manage that risk. Well, they owe in the book, Becoming Your Own Banker. Let me pull it up again. And now he talks about it. Nelson Nash, he's like, they build an airplane, they all have an airspeed indicator, and it say you might be able to do 120 miles an hour. He says, well, you probably go faster than 120. They've got to fudge in they overbuild it, right? Engineers, that's what they do. They overbuild.
Yeah, we overbuild
it. They have to have fudge factor, right? It might be able to do 150, but if you do that, for too long, it's going to come apart on you. So
perfect example to that is I was at Menards today yesterday picking up a new water heater for the house. They told me I can't lay it down, so I couldn't put it in my car because I couldn't lay it down. They'd stand up. So I rented their truck, and it's a Chevy. It's the Menards truck or Home Depot. You can rent the truck there.
Yeah.
The speedometer went to 140 miles an hour. I'm like, that is, let's just say, optimistic.
Optimistic. Yeah.
So I like the idea of what you said. So let's take a real life scenario. Let's say, because I'm not into infinite banking, I would be brand new. I would be your brand new customer. Now, if I've got, let me see, 3 term life insurance policies on myself, that's what I have, and I also have a 401k. I've got a Roth IRA. I've got Bitcoin, and I've got other hard assets, and we'll get to Bitcoin hopefully later. But I've got all these assets. So if I was to start like a whole life policy, is there something I drop or something I adjust within those items that I'm investing in now to go ahead and put into my infinite banking? How do you go about that? And how do you talk to me, a brand new customer, and how that looks financially to me in order for me to rearrange my finances and how I live through month to month?
Yeah. Well, first off, I don't just, somebody calls me up and say, I want to buy a policy today. I don't do that. I am an educator first and foremost, because like I said last week, I don't have a license to lose people's money. But if you quit before it's grown more than what you've paid in, You're going to lose money. So I don't want you quitting. That's the only way to lose is if you quit.
Mm.
So I don't want you quitting. I have had some that, decide they quit it. And I'm like, well, they quit. And okay, I can't help you. But I really want you to understand the concept. The concept is you're accumulating capital in a vehicle that's been around for 200 years. These life insurance companies that we work with are some of them are 120, some are 150, and some are like 200 years old. They've been around for a long time. They've paid dividends consecutively. That means year over year over year over year for over 100 years. That means they've paid dividends through World War I, the actual real pandemic of 1918.
Right.
Live Aid.
Yeah, real one.
The real one. Yeah. Which what they determined, many people died because they wore masks and got pneumonia and died, right?
Yeah,
I mean,
right.
This is circling back around. Like, come on. They paid it through the Great Depression. They've paid it, through the stock market crash in 1929. They paid it through World War II, through the Great Recession, consecutively for over 100 years. So these people have been paying dividends for that amount of time. They've never lost anybody's money. Whereas how many banks went under? I remember when 08 was happening. I used to have a live ticker of how many banks were closing. It was like a couple thousand of them back in 2008, 2009. Now, of course, we have FDIC. So this is not FDIC insured. Neither is your 401k or any stock product, right? So this is not equating it to stock market. But it's like, well, I'm saving. My savings account has $250,000. Or is it? I don't know what it is now. I don't keep much money in savings accounts anymore, so I don't even know what it is. I know they increased it, but so these companies have been around a long time, and they've paid dividends for a very long time, and it's just a place to store capital for when you need it. It gives you guaranteed liquidity, use, and control of that capital. Whereas if you got your money in your 401k, you can borrow from it. You're not borrowing against it. You're borrowing from it. It means you're pulling that money out, loses its compounding. It's limited. They're going to charge you. You have to pay it back at a certain amount every single month. And they, so there is that. Right. Whereas this here, the loan you take from the life insurance company is unstructured because your collateral is your death benefit. If you died, if you have a $500,000 life insurance policy and you have $100,000 policy loan, that's against that $500,000. So what happens is if you pass away with that $100,000 loan, they'll subtract that off, and then your heirs will get the $400,000. So your collateral, whereas like on your HELOC, your collateral is your house. On the policy it's the death benefit that's your collateral.
Okay.
So,
okay.
Yeah. And we say it's not, it grows tax deferred. It's technically tax free, but you can't say it's tax free because what happens is it works a lot like a Roth, right? They call it the rich man's Roth. So I'm not saying that that's what I call it, but they call it the rich man's Roth because you're limited what you can put into a Roth IRA every year. This one here doesn't have limits. You can, you're limited by your income and the amount of death benefit you can purchase. So that's the only limit. And so there's people that pay $100,000 or $1 million a year put into infinite banking, right?
Basically, when I come to you and I say I want to get into this infinite banking, but I need this whole life policy. So I do they tell me what my say, well, I wanted $1 million policy. Do I say I want $1 million policy, or do they say you qualify for $1 million policy? Or
there's several ways. Typically, the way, instead of looking at it, the death benefit side of it, we're looking at the cash value side of it. So we're more focused on the accumulation of capital, and however much you want to put into it every year buys however much death benefit. That is what it is, right? So if you want to put $20,000 a year into it, I'm going to design the policy to maximize the cash value and minimize the death benefit. Now, if you still need more death benefit, you desire to have that, or you want more, we fill that in with term. So I'm not a hater of term.
Gotcha.
Term has several uses. Number one, it guarantees your future insurability if you wanted to build more policies. Number two, term is cheaper than whole life, so you can tack on a term rider, which allows you to then actually stuff more cash into it for a little extra money. Now the problem with term, the older you get, the more expensive it becomes, right? So
right, exactly, yeah.
And we always say that term and whole life have the exact same cost. If you took a term policy to age 121, it would actually be more expensive than the whole life, because the reason being, as you accumulate your cash value, the net amount at risk for the life insurance company is going down. And so one thing that Dave Ramsey says, he'll say, well, they keep the cash value when you die. Okay. Right. And that's his whole shtick. And it's like, okay, well, let's just put this in the same scenario as a mortgage, right? You make your mortgage payments and you get to the 30 years and you walk in to claim your deed. And then you say, well, I want all my payments I made too. No, you get the deed to the house, whatever it's valued at. You don't get all of the payments and the deed to the house, right? Because so it makes it's senseless. So because what you're doing is you're accumulating this cash value. The cash value must equal the death benefit at age 121. So the net amount at risk for the life insurance company goes down every single year. There's less and less at risk. That's why it's actually less expensive than term. And so say you pay into it for 10 years and you've put in $10,000 a year for 10 years. So you paid in $100,000 and you have $100,000 of cash value. So you were insured. And then after that 10 years, how much did you pay for the insurance, right? You have the same amount you paid in cash value. You're like the insurance cost was
right. You're self-insuring.
You're kind of self-insured. Another thing, the way we design them, that we have that dividend that we were talking about that gets paid. That dividend, there's 4 things you can do with a dividend. You can offset the premium, which means if you get a dividend, then that will help make the premium payment for you for the year. You can have it repay loans for you. You can have it pay you in cash, or you can have that dividend buy more insurance. And it's called paid up additions rider. And that paid up additions, it's a one-time payment. So say you get a $1,000 dividend and it's based on your age and your risk classification and all that. Say that $1,000 buys you $3,000 worth of more insurance. So now the insurance value went up by $3,000 and your cash value went up by $1,000, right? So you got your $1,000 dividend, it bought $3,000 worth of insurance, and your cash value went up by $1,000.
Right.
So that they're both constantly going up. I mean, it's really phenomenal how it works. I mean, it's almost that's where it's like what I was saying last week is like it's almost too good to be true, but it's exactly how it works.
Yeah. Go ahead, Ken. You look like you had a question there.
No, I'm following along with this. This is a great explanation of it.
Yeah. So, it just accumulates over time. It's guaranteed. So, say, well, you can invest and make more investments. Well, can you? I mean, if you're doing the dollar cost averaging, well, I mean, I've made a couple investments. I invested in some real estate. So I took a policy loan. Now it was $50,000. So I have my $50,000 of cash flow. It's still in there growing. I borrowed against it. I bought a piece of real estate with it. That real estate is now paying me cash flow, which I'm paying back my loan with. So now I still have the $50,000 that's growing and I have the real estate that's growing. I got 2 things going at the same time. Right. Right. And then when I build up another $50,000, go buy another piece of real estate. Right. So now your money is in 2 places at the same time, basically. Wow. Yeah. We actually had a guy, it's unfortunate. And you can look this up. His name is Vince Capoy, and he was a young man that was wanting to invest in real estate, and he had some money, and he learned about infinite banking, and he got a policy. He bought a policy on himself for $1.5 million and a policy on his wife for $1.5 million. And then he took loan against the policy and invested it in a real estate. Well, sometime shortly after that, he gets shot and killed in an active shooter thing at Pearl Harbor. This is like 4 years ago. He was actually an agent with us. He was one of our agents. And so if he would have just bought this real estate, shot and killed, I mean, however you die, you could die. Nobody knows when it is, right? But it just happens to be, you can look it up on the searches, right? Vince Capoy, Pearl Harbor shooting, look that up. But anyhow, so his wife would have inherited this $50,000 of real estate. Instead, she got 1.5 million for the same thing, right? So
I've got a question. So that's a good explanation of it. So and this isn't meant necessarily to be a commercial, but it certainly can be. That's just fine. So suppose, all right, I want to do this. What's the step a person takes to say, all right, I like this. Obviously, I'm not going to get a life insurance policy and in 3 months think I'm going to take out $100,000 against it because it isn't there. But where do you start? How do you know that you're getting someone that's a good policy or a good agent of the policy and someone that's going to maintain it with a company that, like you were talking about, your companies are 100 years old, 200 years old.
Yeah.
What's the next step for someone that's interested now?
Well, I mean, I personally feel that the people that are studied with, it used to be called the Infinite Banking Institute. They renamed it several years ago to the Nelson Nash Institute. That's what this says right here. So I'm an authorized practitioner for that. I had to take a 40-hour training course. I do yearly training on that. And every practitioner that does that is going to be formally trained in the concept and the implementation of the infinite banking concept. Now, some people do it differently. I mean, we're all independent agents. So I don't work for the Infinite Banking Institute. I'm my own life insurance agent, right? So what I do is then we'll sit down with a client and we'll, find out what their goals are, find out what their income, find out where their current dollars are going into, and then we'll strategize and say, okay, well, maybe you should only put up to the match on your 401k versus the max. So a lot of people that are putting, I think you're allowed to put like $17,000 a year into their 401k.
Well, so just to back up, they need to talk to you. They talk to how do they?
If you don't like me, then you find somebody you do like. But if you go to infinitebanking.org, you click on practitioner finder. You'll get all the people. If you feel like you want somebody locally, you can, find if there's somebody locally, or you can work with me. I work all over the U.S. So that
was my next question. Is there zones and territories with this stuff, or is it? It's just pretty much if you find an agent you like anywhere in the country, they can work with you.
Yeah. Somebody you feel an interview couple, maybe. Just make sure they're going to answer their phone and be there when you got questions. Or
you are weathered report approved. So for our listeners out there, I would say you definitely need to get a hold of. And Bruce will put your website up across the bottom
absolutely.
now. A way to get a hold of you.
It's funny because we were talking the other day when me and my so I'm under a general agent. His name is John Webster. So my company is Dynasty Wealth Partners. That's mainly for my marketing name. I don't own a LLC or anything. That's just my that's my website. That's what I call myself. But he owns MPG Wealth. His name is John Webster. He lives in Arizona. And it's kind of funny, circling back around to the AMSOIL thing. This is really interesting. So I'm on the elevator in Nashville back in 2013, going to that original Infinite Banking where Ron Paul was at. I didn't even have a policy yet. I'm just learning about it. And I'm on there. I have a sport coat on and some nice slacks on, a button shirt, and an AMSOIL ball cap on. And I get in the elevator, and this guy in the elevator is like, AMSOIL, that's good stuff. Me, I'm ready. I'm whipping out a business card, get out of the elevator. I'm like, bow, get it. This guy needs, well, turns out he's already been using AMSOIL for a long, long time. He's, like, oh man. So we trade business cards, and the guy that brought me was also an agent. He's the one that told me about it that I met the year before and whatever. And I bought my policies through him. And man, that guy just kind of flaky. He would never call me back, never answer my phone. And so I called John when hey, I got this idea. What do you does it work like this? Or, and he'd answer or call me right back or whatever. And it's like, man. So I sent a customer. So I never planned on becoming a financial advisor. I was making decent money with AMSOIL already. And I was into this, I'm down this rabbit hole. And I was like, well, can I refer business to you? Do you have like a referral program or anything like that? Well, it's just like real estate. You have to be licensed in order to give payment for referrals. So I was like, well, how hard is that? And he's like, well, you just go get a life insurance license. Once you're licensed, you don't have to sell it, or if you give a referral, then I'll give you a referral fee. I'm like, okay. So I sent him one guy, and he sends me this $1,200 check. Oh, maybe I need to do this.
Yeah.
And then time goes by, and this guy that's been flaking out on me, I'm thinking, is he flaking out on my client the guy that I sent him? And I'm like, man, I'm a control freak. I'm like, well, I don't want to be like sending somebody and not, it's like, I'm already licensed. What does it take for me to actually start doing it? So that would have been 2014. I get my license. I get my policy 2013. And in 2014, I get licensed to give them the referrals. And then I said, okay, I'm going to do this. I'm going to do it right. And the John guy that I met on the elevator with the AMSOIL, I said, hey, do you have a way I could work with you or something like that? He says, yeah, you can join my company, MPG Wealth. And, he brought me on board late 2014. I started studying for it's called Infinite Banking Practitioner. I became a practitioner, what they call it. And I got licensed for that in January of 2015. So I've been doing this personally since 2013. And I sold some policies before I got licensed as Infinite Banking under him. I was working under him. But then once I got my own certificate for Infinite Banking 2015, I've been doing it myself, pretty much since then. So I designed most agents, if like insurance agents, they don't design policies. They say they go up to the company, they call the company, and so I got this client, he wants this and this and this, and then they spit back what they call an illustration, a design, right? Well, I do my own designs. I do it the way I like it, the way I want, the way is. John called me the other day. We're doing a kid policy on one of my clients, and he's like, well, why did you only pay to 65? I said, well, I'm 55. There's no way that this 1-year-old, less than 1-year-old, I'm not going to be alive. And he's going to be paying this policy till age 121. They're going to be like, why am I paying premium to age 121? I said, I put age 65. Okay, that makes sense. And then the one company that we use has what they call the loan interest limitation rider. So when you use this in retirement, so you were asking Bruce about, using this as part of your retirement package, that's your bond side of the house. You can, and there's some studies that we have. I've got documentation on this. There's a couple white papers where they combine using whole life insurance and your typical equities, 401ks, IRAs to balance it out. So if you have a crash and you're pulling from your 401k and it's down 50%, you're double down and on losing. Well, you let that ride for 1 or 2 years, and then you use your cash value to take as a loan until it builds back up and pull out of your 401k. So it's used as a volatility buffer for the 401k type of, or IRAs, or, stocks, bonds, mutual funds, so it's a volatility buffer. Yeah.
Yeah. So this is not a bag my 401k idea, pull everything out, do this whole, go in full life, with this whole life policy, do the infinite banking.
Well, once I got licensed, I burned the ships. I started reading all that. I think it's a scam. I think the whole stock market's a scam.
I mean, you probably could. I mean, but what I'm saying is basically some people will take this as another investment, another investment vehicle, and that's what you want it to look like. As a savings vehicle.
I say a savings vehicle, right? It's more of a savings vehicle than an investment vehicle. I can't call an investment. I don't have an investment license. I can't even tell you to sell your 401k. You asked me, and I was like, well, I can't tell you to do that. Now do I have any money in the market? I can tell you that, and you can take that however you want it. But we cashed ours in, and I went more to the real estate side once that 2008. Just, it's all meant to make all those people up there on Wall Street rich. It really is. It's a scam. the day traders and the robo traders and the your typical financial advisor, they have what they call assets under management. They have $1 million of assets, and they make 1% or 1.5%. Whether the market goes up or down, they're still making that money. So they're losing you money, and they're still getting paid. Like that doesn't make any sense.
Yeah. For a 65-year-old guy to burn the house down at this point in time, it's really scary to even think about doing that. So my next question is that we both listen to Jack Spirko. You're a Jack Spirkoite, so I'm a Jack Spirkoite. So we know John Pugliano. What makes you different than John Pugliano, who is a financial? I guess he's an
investment manager. He loves the stock market.
Investment manager.
Yeah,
right?
yeah. So he will manage your stock portfolio for you, and he hates infinite banking. So does Jack Spirko. Oh, they both hate it. Yeah, I actually advertised on Jack's. He had at one time a website where you could pay. Right. And I advertised on that, and we got into it. I'm like, this is a scam. I'm like, F you, and you don't know what you're talking about. And, it's kind of interesting because we're both very libertarian, free market, Austrian economics, right? And so, I tell people my PhD is smarter than your PhD, so there's another book that I want to talk about. So if you really want to get into the economic side of it and why you should be doing this, there's this book is called How Privatized Banking Really Works. How Privatized Banking Really Works.
Let me pull
that up. And it was written by Robert P. Murphy, PhD. So when I first learned about infinite banking, I learned that Bob Murphy, they call it, his name's Bob Murphy. And I don't know if anybody's ever heard the Contra Krugman, Tom Woods fans in here.
That was great. Yeah, Tom Woods has been great. Contra Krugman was fantastic.
Yeah, so Bob Murphy and Tom Woods were doing this Contra Krugman. So, he's a PhD economist in the Austrian tradition, and I tell people I'm smarter than a PhD because Bob he used to actually be on the board for the Infinite Banking Institute. So I gave it the more credibility because I remember watching him on the House floor telling about the housing crisis and what caused it and whatever. So it gave me some credibility there when I was first researching it myself. But Bob will tell a story at events. It's like I read Carlos Laura. He's a business workout specialist. Before they go, there you go. Yep. And I got that in PDF. If anybody would want it, just have to get in touch with me. You go to my website, send me a message if you want to read that. But it's integrating Austrian economics and the infinite banking concept. So that might be a good explanation if you really want to get into the hows and whys. And then becoming your own banker is going to tell you the story as told by Nelson Nash, the creator of it. But Bob Murphy and Carlos Lara. Carlos is still on the board of the infinite banking. Bob Murphy left last year. He's really into the crypto space, not crypto, the Bitcoin space. And he joined a company called Infinio, and they're trying to integrate whole life insurance with blockchain. That's coming in the future. There's actually a company, but it's not based in the US, that is selling whole life insurance based on blockchain. So kind of interesting. I don't know.
No, that's cool.
That's the future. We're not there yet. I don't know what, but I'm interested in it. But so yeah, Bob tells a story that he read the book. Carlos Lara gave him the book and said, "You need to read this." And and he's like, he read it. He's like, "Oh, yeah, it's kind of a good story, but there's like 5 things wrong with it." Bob's like a 30-year-old something, graduate from PhD stuff or whatever. And he's like, well, he ends up having to read it like 5 different times before it kind of sunk into him. And I was like, I read it the first time and I got it right away. So I tell people, I might be smarter than a PhD. I didn't have to wait. I read the book, and then so I went to that class in Nashville in in July, and I had a policy in August. I'm in, and you don't have to buy a big one. You know what? If people that are exploring the concept, many people start smaller than typically what. So I bought one for my wife and one on myself, 2 different policies. We insured each other. And each one was just like $5,000 a year. And it was like, see how it works, borrow from it, pay it back, and so now those policies are 13 years old. once I burned the ships, went all in. The other 3 policies that I have are way bigger. And then, I totally believe in it. So we've got policies on all our grandkids. When it's time for them to buy that first car, we're going to show them how to get it and how to pay it back. And, if they want to go to college, people do this 529 plan thing. Well, if you listen to Jack Spirko, Bruce, you just listened to one the other day, he was talking about this, Trump is starting this American Academy.
Right.
You might not even need college planning. It'll be for free,
Exactly.
So,
well, look at Jordan Peterson's institute. He's doing too. It's a fraction of what college costs, and you're going to get way better education.
Yeah, and AI, it's like, you're in a room full of 30 kids and you don't quite understand the algebra. Chat GTP won't get tired. They'll keep explaining it a different way until you either get it or,
Remember when they told us you're not going to have a calculator with you all the time.
Exactly. So we're moving forward with my introduction into infinite banking.
Yeah.
And I said, okay, Mike, let's go ahead and let's try to do this. Now I have 3 different term life policies, and I'm going to do this whole life policy now. I'm going to do this. I'm going to jump into this. So do we say, okay, these term life policies really are better suited to go into your whole life policy? We can attach this, whatever you said was a term rider or something like that. And do we actually do something like that? Is that what we do? And then I elect to put in what monies I do put in during the year to match whatever it is of agreement that I have done.
Yeah, it depends. Every situation is different. Every policy design is different. Everybody's goals are different. We look at your term policies. If you've had those for 10 years, 10 years ago, you're not going to get the same rate They're
sending me scary letters right now.
About what?
About if you're going to re-up, because when these are over.
Okay. It's dramatically different. Dramatically.
How much? Yeah, this is how much it's going to be.
Yeah.
Right.
And you won't. There'll be a point in time where you can't afford to keep it.
Exactly.
Yeah. So
I'll give you an example. I've got a $500,000 policy and $25 a month that I started when I was 32 years old. That's not going to be $23 a month anymore.
No.
I
had a 10 that
it's going to be like $26.50, $26.75, somewhere in there.
Yeah, I had one that's just 10. I just canceled when I first got into it. I thought, well, I'll have these converted. And so there's different types of term. There's just like straight term, and then there's convertible term. And convertible term will allow you to buy more whole life policies without any underwriting or questions asked, right? Yeah. So if you bought one at 25 years old and you want to like, well, I'm 45 now, and I want to buy this another infinite banking policy, you just convert that over and there's no questions asked. You get the same rating. Now you don't get the same cost as you were 15 years ago, but you get the same rating. As like my rating on my term policies were super preferred. I was in the military. I run, 12-minute miles, and I was way less. I weighed myself today. I'm 197 pounds. I shouldn't tell you that 55 years old. Probably some people think that's great, but I've been like 175 like my whole entire life. It's like,
I get the I get one foot in the grave rating. That's mine.
But no, we would look at all of that. And if they're not expired and you've been paying on them and they're good policies, you keep them. You just let it expire when it does. And then, have these whole lives doing their thing, so it would all depend. Yeah. Okay. And then the term that you'd want to pay, let's just say you want to, usually a person over 60 might do a what we call limited pay. So you might do a 10 pay or a 20 pay, and so they're paid up. So I did one guy, he's one of my clients, a good friend of mine. He started him at 60 and he's at 70 now. So we did 10 pays on him. So he don't make any more payments after this year. It's paid up. He don't have to pay anything. So if you did a 10 pay, you 65 to 75, and you might take money in another bucket and say, well, I want to take it. And maybe you got money in savings, or maybe you got other things that you're planning to sell a business or something. You take that money, you put it into the policy so it can start growing. So,
yeah. Yeah, because I got a wife that gets very scared, when it goes like, well, what happens if you die? What happens to me? That's why I have these term life insurance policies. So going to a whole life policy, and she's not financially savvy. She depends on me for that knowledge that I have or not have, one of the two. Trying to convince the other side that this is the way to go. Do you find yourself into that, or or is it kind of a mutual thing that happens?
Yeah, I like to work with both of them, and in a personal experience, it seems like every one of the my ex-wife and my current wife, you think, and they're the generation where you had the guaranteed retirement. So my ex-wife's husband or father and mother, the mother would stay home, never worked outside the house. The father was a retired Air Force senior master sergeant and retired, and he died at 57, and he didn't have any life insurance or survivor benefits, which means she would continue to get paid a percentage of his retirement for the rest of her life. So all she had, she was 53 or 54. She had nothing, no job. Guess where she came and lived with some 20-something-year-old young couples that wished to be romantic with their mother-in-law living in their house.
Right. Exactly.
Yeah. But it is what it is. So there's that one. And a lot. I've seen people in the military myself that they have this program. It's called Survivor Benefit SBP, Survivor Benefit Program, and you pay into it. It's kind of like an annuity, so that if you passed away before your spouse will then get a portion of your retirement. Right. Otherwise, if you don't do that, that retirement goes away. For done. You don't get anything. Well, instead you could calculate what that cost of that. And you can say, well, I could buy a policy, a whole life policy for what I paid in that. So, but if my spouse dies before, because that's the problem. If your spouse dies first, you've paid into it and you don't get anything. It's kind of a rip off, so if you buy the whole life policy in lieu of the survivor benefit plan, that might be a good idea. And as far as, retirement, my current wife, Alicia, her father worked 35 years at Coca-Cola, had a great retirement, when they were both at Social Security age. They were in their 70s. Now you remember, both of you are getting Social Security, right? One passes away, you get the higher of the two.
Right.
So now that cuts that income. And then if you don't have that retirement income coming in from that went away. So she went from having great, like $6,000 a month income to like $1,500 a month.
Yeah, that sucks.
You can't live on that. You can't live on that. She had to work and whatnot. I think that's what scares.
I think that's what would scare anybody, instantly on something that you think about when it comes to this type of decision. So it's great that
that's a peace of mind of a guarantee that that's in place. It's be guaranteed. You know what I mean? Versus the stock market is guaranteed. That retirement is not guaranteed. The dual social securities, that's not guaranteed. One goes away. So if you just did that peace of mind. That allows you to have a better retirement because that they're taken care of, So that's why I came up with the Dynasty Wealth thing. I always thought, even before I ever got involved with this, is like, even as a kid, it's like, why isn't every successive generation building more wealth upon each other, right? It should be a pyramid, but it's not. It's like every generation starts back over at zero. And it's like, well, I don't want my kids or my grandkids or my great grandkids, like starting out with a abacus when they have access to a freaking iPhone 12. Like, I want my great grandkids to start out with the best, not starting over inventing electricity from scratch or something. And there's some interesting books there's a lot of people in the space that write books about this, but the one is called "What Would the Rockefellers Do?" And he goes through the story of how the Rockefellers and the Vanderbilts, they were at the same time, both the richest people in the world. Well, the Vanderbilts divided all their money up. The Rockefellers kept all their money together, and they used whole life insurance to to do that, and they borrow. They doing this before they called it infinite banking, and the
Mhm.
Rockefellers have increased their income or their wealth of the Rockefellers, however much exponentially, and there's not one single Vanderbilt that is a millionaire.
Multi-generational then. So
yeah, it's multi-generational. So that's what really got me is like, I know I'm not going to pass, I'm not going to be here, but passing something on, if my great grandkid gets this, $10,000 a year check that says from Michael Sparks on it, like, who's this guy? Yeah.
Well, let's talk about the bad part. Let's talk about, so we talked at the beginning of the first show about multi-level marketing, direct marketing, whatever you call it. Pyramid scheme, whatever. So we know what people hate about that. Why do people hate whole life stuff? I mean, what is the black eye that who gave the black eye to that?
The buzzwords, it's the whole buy term and invest the difference, people, and the stock market. So like I said earlier, before like the 1970s, everybody, when you hear everybody heard the saying, he bought the farm.
Mm-hmm.
Right. When he bought the farm, he died, right? Because they had whole life insurance. And if they died on the farm, it was paid for. That's what that was about. It's all like, and if you look at all the whole life insurance companies that are around, none of them are located in Manhattan.
Okay.
The ones I work with are all located in like Cincinnati, Ohio, and Indianapolis, Indiana, the heartbeat of America. They're all created from, like I think the first one was like priests and stuff that got the congregation got together and made these life insurance companies to take care of the priests or something like that. Is a mutual aid society. That's where it started. The Woodmen of the world, right? Is a mutual aid society. So that's how they were started. They were started in the Midwest and to help people pay for these farms as a savings account. That type of thing. So Wall Street doesn't like life insurance companies, guaranteed. They don't want you, every financial advisor says this is stupid. And they're like, well, I had one, he's fee only.
It's loud. It's loud. It's a loud subject. I mean, when
it really is.
It's
love or hate, and the people that know it love it. They buy lots of it. For some reason, there's banks. Banks have this thing called BOLI, BOLI, bank-owned life insurance. And if it was bad, why would Bank of America have like billions, like 54 billion in bank-owned life insurance?
It's kind of like Bitcoin, right?
Yeah, kind of like Bitcoin, So if it was bad for Bank of America to own it, why wouldn't you want to own it? Do what the banks do, right? Not what the stock people are doing. But they just can't see past the fact that you're putting in this, it's accumulating. It's like, well, you could do better. You're only making 3 or 4% on this money here in your whole life insurance policy. But if you bought it and put the same dollar amount in the S&P 500, it's compound 12%. You would have millions and millions of dollars. Yeah, you could, or you could not,
Right.
So
well, let's switch gears a little bit. Let's switch gears a little bit, only because of the fact that we can talk about infinite banking all night long. And
you can tell I'm passionate about it.
We can have a spaghetti bowl full of facts and figures and all kinds of other stuff that come around. But
just to say this before we do move on.
Yeah, go ahead.
So yeah, if you came to me, I would sit down with you and we do what we call financial needs analysis. We're going to look at what your plan is now, what your future plan is, and you're going to get something designed that's going to work for you. I tell people, I want it to be comfortable. I don't want you to like stretch out or like, oh, I'll never make these. If something happened, if everything works just right, this policy is going to work. No, I want to be able to say, hey, even if you had to go work at Walmart, your policy is still going to work out. So we build flexibility into it. It's not like static. And there's a lot of little levers. And it says like, well, if I want to pay on it for 7 years instead of 10 years, we can pull levers. Like I said, you could use your dividend to make the premium for you. You can do what they call reduce paid up, which is reducing the death benefit down, but the policy, you don't make any more premium payments, and that policy stays in force for the rest of your life, regardless. So so we're going to design it exactly what you would be comfortable with, what's going to work for you, and then you're going to be able to be happy with it. So
yeah, cool. Man, I really appreciate all that information. You've given me something to think about.
We need to get you the book first. Then
I'll get the book.
I'll get a book coming your way.
I've got links of everything that you said already into the show notes and everything for both podcasts.
Yeah.
So everything's there, and they can contact.
And I got books
you.
on my website there, Dynasty Wealth Partners. So I own the books. I get them. I don't make money selling books, so, but you're getting a real book from me. Sometimes you get on Amazon or whatever, they've been bootlegged or what have you. If you don't get it from me, go to infinitebanking.org and you can order. I sell them the same price as they do. You're just going to get a business card from me instead of nobody.
Okay. All right. Well, there's 4 of us here, and we all believe in freedom. We all believe in the ultimate freedom. We believe in the Second Amendment. We believe in the First Amendment. We believe in all that stuff. But one of us in the crowd doesn't believe in the magic computer money. And I want to bring up the subject of magic computer software money. The dirty word that he'll look at is, and that's Bitcoin.
Bitcoin. Yeah. Well, I mean, you can't. Well, there's a lot of people that don't believe in it, right? So there's a lot of people in infinite banking. They don't believe in it. There's a lot of people that believe in silver and gold. And it's like, well,
you and I both do pretty much the ultimate freedom type thing. We invest in Bitcoin, but we also use another software called Nostr to send messages back and forth. And I know that Jason also uses Nostr.
Good.
Very, very young, very, very younger than Bitcoin, as a matter of fact, as a protocol for doing any type of messaging or something, things like that. They are building software that makes it look like, X and Twitter and Facebook and all that stuff. So that's all fine and dandy. But in your experience and in my experience, and I want your experience in it, number one, what got you into Bitcoin? What got you into Nostr? Was it the whole freedom part? Was it that freedom of having to have your own keys to be able to control your own destiny in this?
Yeah. Well, it's circling back to infinite banking. It's the control. Yeah. It's that's what I like about it. It's the free. I'm not part of some cabal. I get control of my own finance, my own stuff. It's the opposite of socialism, right? And unfortunately, I have family members that just think that self-sovereignty and individualism, and I was telling the other day, and it's like they're all for these minorities. I said, well, I'm for the smallest minority, right? Which is the individual. Me. Freedom of association, and we all went through all that crap from 2020 and kicking people off and fake news, and and I was like, well, who are you to tell me what I can consume and not consume? And these big social media. I've been on social media before it was even called social. We were probably all on these message board forums, right? I had one for IRC for Volkswagens. I had Bob is the oil guy. I was on there. And it's the same thing. You're creating relationships with people.
The BBS.
I'm not quite that far back, but
I'm that far back. Stone tablet. Stone tablet.
Yeah. So I hanging out at the bar or whatever, it's how far back you want to go. But
Bruce, I hate to do this to you, but I've got a hard stop. I got to get running here. I've been texting you and emailing you, but you're not paying any attention to it for the last 25 minutes. I've got some things I got to test, and I've got this water heater thing I got to go take. So, Michael, thank you so much for coming on. This has been really cool listening to this all and seeing this. We're going to be in touch soon. We've got to check in. I'm interested in this whole thing, but I do have to run. So sorry about that. But go to madgatestudio.com for all of your art needs. And I'll leave it with that.
Sounds good.
We'll see you, Ken. So now we can talk bad about Ken, but anyway.
Is Ken the
And
one
I'm back. So here we go. So here's what the problem is with Bitcoin. Oh, I'm sorry. I'm out. See you guys.
So Ken was the one we're talking about.
Yeah, Ken is the one that we're talking about. He
Oh, okay.
doesn't believe in the magic money. But no, just to be serious about it, is that it's something new. And, you know, even though Bitcoin has been around since, I believe, 2008, something like that, I might be wrong in that. And let's just say it's like 14, 15 years old.
Yeah.
And in currency form, in monetary form, it's very, very young in its inception. Same with Nostr, which is a protocol that you use to message people, kind of like BBS, IRC chat, all that other stuff that we used to do. You and Mike, you and I used to do. So my biggest question is that I guess you have to believe. I guess, a lot of people, we had one co-host at one time who said it's a cult. It's definitely a cult.
Bitcoin is a cult.
Yeah, Bitcoin is a cult.
Okay.
It's our god. And so it's just a funny subject. I really just wanted to hit it with you. Just real
man,
quick
I'd love to. And it's
before we
another book I brought here. I just got it. I'm on page 55, and it's called The Big Print. The Big Print by Lawrence Leopard. I learned about this one. It's supposed to be
Lawrence Lepard. Lawrence Lepard.
Yeah, it's supposed to be really good for beginners to get it. It's kind of intimidating because it's like 300 pages long, but it's breaking up in sections. And it was kind of funny. You were what we were talking about tonight. I'm in the part about classical economics. We haven't talked about Bitcoin yet. It's just about what's going on, and different things. And there's a quote in here that I actually just put it on Facebook a little bit ago. This gal, where in the heck is she at here? I should have underlined it. Why didn't I do that? Well, I'll find it. She was talking about how, and I don't think people realize, and I've said this before. Next time you go pump gas at the gas pump, there'll be a sticker from the state on the pump that says this is certified that you get exactly 1 gallon of gas.
Mm-hmm.
But what are you paying for it with, right? Paying for it with a rubber band money. It's not, it's flexible. So you got this volume, a certain volume, but your money has no standard. And they can't comprehend that you used to be able to hold money in your bottom of your safe.
Yeah.
And if it was $1,000, it had the same purchasing power 10 years from now for the $1,000. You got we're experiencing it. Things are going up $90,000 for a new truck than I paid $23,000 for 15 years ago. Well,
exactly. It's crazy. And I can't get anybody else to realize that, except for the fact they go like, oh my God, well, what if the internet goes down? And I keep telling them, I said, well, if the internet goes down and the power goes out and stuff like that, we got a hell of a lot more problems whether or not we can retain your Bitcoin or not.
If it goes down, it's still there.
It's still there. Yeah.
When it comes back up, it will be there. It is on. There's millions of computers running the Bitcoin blockchain.
Mm-hmm.
Every computer in the entire world gets nuked, and they're talking about putting blockchain up in outer space, right?
Right. Yeah. So that's what they're talking about. Right. So
everyone would have to go down and never come back up.
Do you do the free Bitcoin stuff every day? I do the free Bitcoin stuff every day. I do the Fold app. I do the Fountain.fm. Anything I can get free Bitcoin at, because it's like picking pennies up off the ground. It really is.
It really is. I mean, I did one the other day. If you're I tell people all the time, if you don't understand Bitcoin and you got free Bitcoin to learn about it, spending the money you're already spending, why not use a Fold? Well, how can they give you that? Chewy.com. We've got dogs and cats here. They pay 6% in Bitcoin. I put $200 and you put it on Chewy.com. So when it auto ships, it just pulls from your gift card. So I bought a $200 gift card. I got 13,000 sats.
Yeah, absolutely.
I was paying for it with a regular credit card before. I wasn't getting nothing from that,
Yeah, exactly.
Maybe 2% from Discover or wherever we get, if we get a little rewards card. But why not? Paid my house payment. I'd finally figured out how to set that up on the old card. And I got, it was only 5,000 sats, but 5,000 sats I didn't have,
5,000 sats you did not have.
Yeah.
Jason, what do you say about Bitcoin? I know me and you banter it back and forth, but you are a Bitcoin guy too.
Yeah, I'm a little, not huge into it. I mean, I use Fountain.fm also just to gain some, and I do buy a little bit here and there, but not nearly as much as Bruce does.
Yeah. How do you like it so far? What do you think? I mean, you
About
just kind of sit there and accumulate it, right?
Yeah, I just every once in a while I'll buy some. Back when Doge was like 2 cents a coin, I had bought a bunch of it, like $20 worth, and then it went up really high, and then I sold it all, and then it crashed. So I was really happy when I sold it all, because everybody's like, "Yeah, I'm going to buy a Lamborghini when it goes to $1." I'm like, "It's never going to hit $1, so I'm selling now when it's still 90 cents a coin."
Wow. Yeah. Well, I look at it, there's technology is always changing, right? I mean, how many people, said that, the automobile was never going to take off, and they were riding their horses, and
right.
Or the fridge.
The internet's never going to work. I wouldn't say I'm an early adopter, but I remember buying my first computer. It was here at Fort Campbell. And we got on, I think it was Prodigy or something like that. And I'm like, this is weird. It doesn't work.
Prodigy,
I didn't understand it, and we went overseas after that. And I kind of didn't really do the internet much. And then we came back, and it was like 3 years later. It was like, oh my God, you could really get on the real internet then, this is like the late 90s. So I've been involved, and it's like amazing, websites. I built my first website from scratch. My first lubedirect.com. I built that using HTML, just straight coding, and it just took so long. And then I decided 2008, I'm going to upgrade my website. I got a WordPress for Dummies. I went and read that and figured out how to do a WordPress site. And I freaking just did that. It's just like constantly learning, but I think, money, the money has changed many, many times over thousands of years, right? The medium of exchange, what was gold and silver, but then, that can be debased, and it can be faked. You can't fake Bitcoin. It can't be diluted. There's only 21 million. So it's the opposite of inflation. Everything is deflationary compared to Bitcoin, right? So I listened probably longer than I should have. I try to say I'm an early adopter, but my biggest thing is, so I'm really a privacy person, and I don't want I was trying to get Bitcoin without the government tracking me, I'm really people say,
I gave up KYC. I gave up KYC. I gave that up.
So I had the wallet on my phone, and I was doing a show. It's called Freedom Fest in South Dakota in 2021. Because we didn't know where to go on vacation, and Freedom Fest is an expo for Tom Woods was there. No, he wasn't there. He got sick before he came, but all kinds of cool people that we all know were there. And so I had I set up a booth for Infinite Banking, and I had my books there. And a guy walked up, and he says, "You accept crypto?" And I said, "Well, I've got this app on my phone. I didn't own any. I didn't even know how to get it. I just had the app. It was one Jack's Liberty Wallet. That's what I had. The Jack.
Right. Liberty Wallet. Okay,
yeah, Liberty Wallet. I had that on my phone, and I'm like, I could open it. And I told the guys, I said, well, if you can show me how to do it, I'll sell you the book for, whatever. And he says, well, he was into the pirate chain, the big.
Okay.
Yeah. He was dressed. They had a whole booth.
Yeah.
They were dressed up as pirates. It was quite funny at the thing, but that wasn't on that wallet. I said, well, it's not on there. And he says, well, I'll just pay you in Bitcoin. So he paid me in Bitcoin. I think Bitcoin at the time was at $45,000. He bought a book from me, and I said, then I started getting down that rabbit hole, and I started listening to the Sailor, listening to more Jack, reading books. And I said, this is too important to wait for somebody to pay me in Bitcoin. I got to start stacking it with KYC. You know,
my favorite Jack Bitcoin story is his what is it? We're sitting at 84 right now. His $168,000 shotgun that he bought.
shotgun, yeah. He bought for $700 in Bitcoin, right?
Yeah, he spent 2 Bitcoin on a shotgun, and now he's going like, I should have never spent that Bitcoin. So this is a $168,000 shotgun that he has right now. So it's funny as hell. Really quick before we go, Nostr. Let's talk about Nostr real quick. Now, Nostr is in its way big infancy. I mean, I don't have nearly the following on Nostr.
It's 2 years though. I've been on for 2 years.
Yeah, you've been on longer than I have. You've been on longer than
I joined 420 2 years ago.
How do you like it? What do you think so far?
It's great. I think the idea is great. I love the value for value aspect of it. I think that should be promoted more. I think the decentralization, all these people are trying to do everything on X or getting shadow banned and all this other crap. I don't know why more of the libertarian type of people aren't at least trying it, and it was complicated at first. I mean, my first set of keys is gone. I
lost my first.
Luckily, it was like the first day. It was like I didn't have a lot of stuff on there, but I was able to do it now. I got it all saved and backed up, but the first ones, it was gone. So there is that aspect, but with freedom comes responsibility, and so absolutely. Same with Bitcoin. If you want freedom money, you got to be responsible for it. If I gave my 10-year-old $1,000 of cash, would they be responsible with it? No, probably not. Well, you got to hold their hand and say, well, here's $1. Go lose that first, So, I always say, start small, go slow, right? So start small, go slow with Bitcoin, start small, go slow with Nostr, and check it out. But just knowing that you can't be deplatformed, you can't, you can be as private as you want, and you can, it's great.
Yeah, cool. Michael.
Of course, me, I can't not use my name because I'm in. It's like, and I always tell people, I said, really, I don't care who knows my name or not. I said,
I'm who I am. I do
the CIA, the CIA and FBI already know who I am, and they already know that I hate their guts, so it's okay,
Michael, thank you again for coming on the show, man. Go ahead and plug Dynasty Wealth Partners and your AMSOIL.
Yeah. So appreciate it. It was good talking to you guys, and like you say, I'm passionate about the things that I'm involved with, which is my main business is AMSOIL Lube-Direct.com. I've been doing that for 25 years. Entrepreneur, and help people take better care of their vehicles and have higher performance and make their vehicles last longer. And then my other company, Dynasty Wealth Partners, that's my infinite banking. I teach people how to take control of their capital and be able to build wealth in a manner that a lot of people don't understand, but a lot of people need this. And that's why it's Dynasty Wealth Partners, because I want to make multi-generational wealth for as many families as possible. And then, I'm big time Bitcoin maxi. I don't do crypto. Bitcoin is not crypto. Bitcoin is Bitcoin. So, yeah.
Cool. Jason, you got anything to say before we leave? There we go. My silent partner is just great. Hey, we have a morning show that we go to called the Weathered View. Please join us on X Spaces every morning, 6 a.m. Pacific time. You can come in and you can join in on the conversation. Opine when you want to. All you got to do is follow me at also known as TWS. That's also known as TWS, and you can get in there, and I will let you say whatever you want and let the panel just destroy you because they don't like what you say. But anyway, no, we have a good time there. We talk about fun things. We talk about the news overnight, the weekend, whatever. And then I put in a little, this and that's in there, but it's always fun to have you there. And if you like this podcast, please like, share, and subscribe to this podcast. Share it with 4 of your friends and then one person that you don't like, because we're growing every day. Again, I want to thank Michael Sparks for being here from Dynasty Wealth Partners and lubedirect.com. We should have you again because it was a pleasure talking to you. And I will wish you adieu and have a good night. And for everybody else, you guys have a great night and be good to yourselves. We'll see you later. Bye-bye.